this transfer to states, okay. This is an area where student don't have any clarity because it is not there in the conventional classes regarding transfer to states, okay. So when we discuss the budget concepts, we have said, and as well as in the budget, latest budget class, we told that, okay, there is a mechanism in which the central government transfer money to the states. Yes or no? And most of the transfers are based on Finance Commission recommendation. Okay, so one transfer you already know, that is tax devolution. Okay, tax devolution means a certain percentage of the central government taxes from the divisible pool. Divisible pool means, see, there are certain union taxes which goes to the divisible pool. Which all taxes are there in the divisible pool? Union excise duty. Union excise duty is there. Customs duty is there. Corporation tax is there. Income tax is there. Okay? Huh? Don't break. Sales tax is not there in the divisible pool. Sales tax is already merged with GST, na? GST is not there in the divisible pool. GST is different. GST is already transferred 50-50. GST will not come into the divisible. Why? GST is already settled. Then and there itself. Half you take, half. Means half sender, half state. That is now. That is we discussed. CGST, SGST. Equal. But if it put in the divisible pool, state will get less only, na? 41% only, na? Okay, so be very clear, in the divisible pool, from the divisible pool, so these are the main taxes, which all, that is, will in order wise, corporation tax, income tax, okay, that is 2 direct taxes, then union excise duty and customs duty. Now, I want to tell you one very important thing, okay, so since in the divisible pool, see, from the divisible pool only, Finance Commission recommends. So when we talk about tax devolution, this is one of the major function of Finance Commission, to recommend how much to be transferred, how much of the central tax revenue. See, that's we told, na? Gross tax revenue. What is gross tax revenue? The total tax the center collect, okay? But the entire tax revenue the center can't take. It has to, a certain proportion have to be transferred to the state. So those transfer, which all taxes will be transferred, they are from the divisible pool. See, IGST is also same, interest rate is same. Only difference IGST will come when it is interstate. So what will half the center will take? The remaining half, which state it will get? Destination state. So don't, see, GST is settled monthly wise. We already discussed in detail about GST. Don't bring GST here and confuse yourself. Okay, so what I am trying, since we are talking about transfer to states, okay, so one transfer is based on the, now why I am discussing, because already 15th Finance Commission have submitted its report, and 15th Finance Commission report is very interesting. See, normally the Finance Commission cycle is broken. I think very less people knows it. Finance Commission cycle is for 5 years. So it used to be very easy. 2000 to 2005, 2005 to 2010, 2010 to 2015, 2015 to 2020. That was the 14th Finance Commission. 14th Finance Commission. This was the time period. But due to lockdown and other things, okay, first Finance Commission recommended for 1 year. So in the interim, see, because due to slowdown, and first 15th Finance Commission recommended for 1 year, and that 1 year recommendation will get over by March. Then when you were reading news, when I shared many articles, okay, when the finance minister presented the budget, Finance Commission report also placed in the Parliament. But that Finance Commission report is for the next 5 years. That is from 21 to 26. So this chain is broken. Next 1 year is there. So for 1 year it made a recommendation, and then for the next year, 5 years, so it was an interim report for 1 year. Now full report is submitted. So we will discuss in detail. Okay, I have already discussed this 1 year report and 5 year report. I'll discuss in detail. It's a current affair. A very important current affair. Whenever Finance Commission submit a report that year, because every 5 years there will be a Finance Commission question. You can check your polity question paper, okay? Because Finance Commission we are dealing there, but I will deal it separately since it is related with economy and the public finance. Okay, so that you know down. So one speciality of, see, there are many recommendations is there since we are talking about tax transfer to state. Remember this very important point, okay? That is the most important, means how much tax should be shared between the center and the state. So 14th Finance Commission recommended the 42%. 14th Finance Commission recommended 42, means out of, from the divisible pool, 42% were. So I just want to make a clarification since you are confused with GST. Earlier when service tax was there in the divisible pool. Getting service tax there was the current, it was, but now things changed. Now it is goods and service tax. Okay, so 42%, as per the 14th Finance Commission recommendation, from the divisible pool of the sender, 42%. That's why it is called. It is a divisible pool. Divisible. It will be divided, and it's based on the Finance Commission recommendation. So, 14th Finance Commission recommended 42%. So the 15th Finance Commission also for that single report, 1 year report and the 5 year report, that percentage is same. That is 41%. Now why? So you may think that it is a decrease. It's not a decrease. Because in between what happened is the Jammu and Kashmir became a union territory. Along with Ladakh, two separate union territories. Means a state became two union territory, which never happened in India. For the first time it is happening. Union territory have become state, but states have never become. That's not our discussion. What I am saying is, so keep this in mind that, okay, so 41%. Now 15th Finance Commission, how many states are there now? 28 states. So this 28 states will get 41%. The 1% reduction is what? Jammu and Kashmir, that Ladakh share, approximately. This is what Finance Commission says. So there is no decrease in the tax devolution share. Along with that, okay, Finance Commission, other than this is actually tax devolution. Then the second important function of the Finance Commission is that, okay, it will recommend different grants. See, the central government, see, you understand state revenue is very less compared to sender. State's revenue is less compared to the sender. But state has a very important responsibility. Okay, so one is every year they will get, based on this in the union budget, it will be allotted. That's why gross tax revenue become net tax revenue because of this transfer to share. But other than that, so that is there automatically it is there in the tax. Other than that, we have seen under the revenue expenditure. From the revenue expenditure, there are different grants. Central government transfer grants to both states and union territory. So for that the union, so this grants, there are different types of grants is there. What is the specialty of grant? Once given, no need to pay back. So tax devolution is there, grants transfer is there. Other than that, the state may borrow also. That's a different thing. Borrowing means it is a debt. That's a different thing. So you need to understand the different. But here when in this topic, the transfer to states, it's basically talking about mainly the grants. Already tax devolution we have dealt it separately. Okay, they can ask you what are the different types of grants the sender transfer to the state. Okay, so we'll see that. Okay, so the central government, so this is the economic survey. Remember, the central government normally accepts all the recommendations of the Finance Commission. Why? Because Finance Commission is a constitutional body, in order to avoid any conflict between center and state. So 15th Finance Commission, see, economic survey is talking only about that 1 year, the report for the financial year 2021. See, the report presented in the budget is not mentioned in the economic survey. Okay, but so in the report for the financial year, this report for the financial year 2021, normally Finance Commission always give for 5 years. Okay, So economic survey says that the report for the financial year 2021 relating to the post-devolution revenue. See, understand post-devolution. What is this post-devolution? After paying the tax, that is this divisible pool. So you need to understand the meaning of every word. So the post-devolution revenue deficit grant, this is one grant sender makes to the state based on whose recommendation? Finance Commission. What is revenue deficit? You know what is post-devolution? You know what is revenue deficit? Whose revenue deficit? Sender's revenue deficit or state revenue deficit? State. How the sender will transfer? See, understand the word. Sender is giving grant to state. Sender is giving grant to state. So, if the sender is going to give grant to revenue deficit grant to Kerala, how much? What is the Kerala's revenue deficit? So, actually, the Finance Commission is trying to ensure that every state's revenue account is neutral or balanced. How? See, try to understand. See, all these things we discussed in detail in our conceptual class. See, I told you that if the revenue account is surplus or if the revenue account is not deficit or equal, what is revenue deficit? Means revenue expenditure and revenue receipts is same. Then what will be there? Fiscal deficit will be there. What is the fiscal deficit? Borrowing. But if that borrowing is for what? That is for capital expenditure only. See, there will be deficit in a country like India. But if that deficit is fully for capital expenditure, it's good. But what is the problem is that we are using it for, the sender is using it for revenue expenditure. That is the concern. It is not productive. Okay. So at the state level, based on the FRBM commitment and other things, at the state level, we are trying to make every state having, there should not be any revenue, means they are trying to reduce the revenue deficit. Where sender is helping the state to reduce the revenue deficit. So, but sender is also having shortage in revenue. So, each state, so for revenue surplus states, will they get no, this grant is only for revenue deficit states. And who is recommending? A completely independent, constitutional, neutral body, Finance Commission. No states will complain. So this is one grant. Remember, because they can give you a choice, 1, 2, 3 statement. That time you should not, okay, each term. So one is post-devolution revenue deficit grant. So is it clear? Then grant to local bodies. Grant for local bodies. That is for urban local bodies as well as for rural local body. That is Panchayat and municipalities, etc. All the municipal bodies. Then disaster management grant. So economic survey explicitly talking about 3 grants. So 1, 2, 3. Disaster management grants, local body grants, and tax post-devolution revenue deficit grant. Okay. So the 15th Finance Commission recommendation, what the economic survey is talking regarding the 15th Commission, this report is based on this annual report, interim report. Okay, full report we'll discuss. Okay, but it's a continuity. These grants is there in the 5-year report also. So for the financial year, see, we are concerned about, the economic survey is for the year 2021. Economic survey is discussing which year? The current year, 2020-21. Okay, so in this year, 2021, Finance Commission recommended, 15th Finance Commission recommended a grants in aid totaling, a total grant of 1.99 lakh crore for transferring to the state for this year. For these 3 grants. So total is, for combined together, sender for this one year, 1.99 lakh crore. So you need to know which grant is highest, that in decreasing order. We'll come to it. So which is approximately 50% higher than, this grant is 50% higher than the 14th Finance Commission. See, when we say 1920, it is which Finance Commission recommendation? 14th Finance Commission recommendation. The last year of the 14th. So that is 14. Don't get confused. This is 14, this is 15. Okay. So So economic survey says that the grant transfer for 2021 is 50% higher than 1920. Okay, these terms they can copy and ask. Okay, it's mentioned in the economic survey. Out of this corpus, out of this 1.99 lakh crore, 90,000 is allocated to local bodies. 90,000. Out of this 90,000 to local bodies, see, 1.99 lakh crore is the total transfer for the financial 1 year. Out of this 90,000 crore for local bodies. Out of this, there are two local bodies are there, na? Urban local body and rural local body. Which bodies is getting higher share? Rural is getting. Urban is getting only 32.5. Remaining how much it will be there? 67.5. Am I correct? Yes. So rural local bodies are getting more than urban local bodies. Why? In terms of area wise, India is more a rural country than an urban country. Population. Unlike that of the 14th Finance Commission, okay, so this is a specialty where there is making a comparison between, okay, 14th Commission recommendation, 15th Finance Commission. Unlike the 14th Finance Commission recommendation, 15th Finance Commission recommended grants. The local bodies was also allocated to see. So in this, the local bodies share. See all these are what you have studied under polity. Okay, for 5th and 6th, so 5th Finance Commission have allotted grants to what? Unlike 14th local bodies, it was allocated to 5th. That is, and what is area covered under the 5th schedule as well as 6th schedule. That is scheduled area and tribal area. Also, it has recommended transfer to if you know the tier of the local government, okay, it to the mandal level or tehsil level, middle level, and also to the district level. So to rural local bodies, okay, rural local bodies is having a 3 tier: gram panchayat, a middle tier, that is tehsil or mandal level, and the higher district level. Okay, so it also, when we talk about rural local body, it also even recommended how much to be transferred to the district level, how much to be transferred to the middle level or mandal level. Okay, and it also recommended this time how much coming under the urban cantonment board comes under the urban local bodies. So there are different types of urban local bodies are there. Okay, so it also for the first time I have allocated to 59 cantonment boards from the urban local bodies. So all these things are mentioned in the economic survey. You have to expect. If a question comes, don't blame. It's there in the economic survey. You're supposed to know it. See, cantonment board comes under this urban local body share. The other things, say 5th schedule and 6th schedule comes under the rural local body fund. Then, very, very, very important, okay. Moreover, for the first time, Finance Commission grants were allocated for the purpose of improving ambient air quality in million plus cities. Metro cities, so million plus cities, okay, cities which is having more than 10 lakh population. So those cities which take care of whoever improve the air quality, for them a special grants have been allotted. So whoever take care, so if you take care to reduce pollution, air pollution, a grant has been provided. So since these are the things which is been discussed in your economic survey, please note it so that if a question comes, you can easily answer it. And these are the things which confuse you, for the first time. Or they said 15th Finance Commission have recommended these things. You are supposed to know it. Okay. Now this is just for your knowledge. Comparing 2 years. Comparing the 1920 and 2021. 1920 it is 14th Finance Commission. 2021 is 15th Finance Commission. So which one is getting the highest local bodies grant? Followed by revenue deficit grant. Followed by disaster management grant. A trend. Okay. Maximum, highest share is going to local bodies, then revenue deficit grant, and see 74,000 to revenue deficit grant. I'm talking about all the states. And finally, disaster management grant for disaster management. Okay, so this is regarding the transfer to state. Okay, yes. Many other things I have discussed while discussing budget. Okay, so you have to connect it both.